What's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. Now, before we get started with part 2 of supply and demand, I want you guys to make sure you subscribe, hit that thumbs up, and that bell notification icon to be updated whenever I upload a new video. Ooh, that was a little tongue twister. And be sure to go in the comments. I want to know how long you guys have been trading, right? So if you guys have any questions at all, any type of content that you want me to produce, feel free to drop it down in the comments down below. Okay, but I want to know, how long have you been trading? All right, and what style are you currently trading? Are you a breakout trader? Are you a support and resistance trader? Are you a Fibonacci trader, structured trader? How do you currently trade? That's what I want to know, because if I know how you all trade, then I can better assist you with the videos and things like that I release. All right, so in this video, we're going to be talking about more supply and demand. All right, this is going to be part 2 of probably a 4-part, maybe a 5-part video series. I just want to make sure that I touch all the bases. Someone asked me about supply and demand, so here goes the content for you, brother. All right, so we're going to be talking about continuation demand models and continuation supply models. Now, on the previous video, if you haven't watched that video, please go check that one out first, because it's going to give you the basis for everything, because I'm not going to go over any type of market psychology within this video. Okay, we're just going to hop right into it. All right, so you have two different types for demand, and you have two different types for supply. So very, very similar to part 1, except our rally-based rallies or our drop-based drops are a little different. Okay, so this is going to be a continuation model. So instead of trying to reverse the market, you're going to be just flowing with it. Now, I personally like reversal models a little better than the continuation models, mainly because the continuation models can sometimes seek demand lower or supply higher, right? But if you are at a reversal, okay, then you can really read what price is doing to anticipate, where the money is within the market. All right, but you can't always do that with continuation models. So, I mean, at the end of the day, trading is not based on certainty, it's based on probability. So at the end of the day, you're always going to end up on top, okay, at the end of the series of trades. But one thing to keep in mind is that the continuation models can sometimes, like, let's say you have, for example, let's say we pop this up here, and then let's say we pop this down here, right? Let's say price did not come back to the demand right here within this area. Okay, if price did not come back to this demand, okay, what could happen is it could come back to this demand right here. Okay, so for all those people who, set their order blocks based off the higher time frame, okay, the reason why I have a 2-step method using my 3-step time frame method on the lower time frame to take my entries is simply because I don't want to run into something like this. Okay, so if you're part of my mentorship program and you trade continuations of demand or continuations of supply, you should be good as it relates to going to the lower time frame and taking entries. But if you're on this YouTube channel and you simply just set alerts, okay, and then take the trade based off the higher time frame order block, sometimes what price will do is it will reach below, okay, collect more liquidity below this low right here and reach into a demand zone that has not been fulfilled yet, or it'll reach above into a supply zone that has not been fulfilled yet. So that is just something to keep in mind. I'm not trying to take you guys away from trading continuations at all, because I do trade continuations. I just use a little bit more confluence on lower time frame with my entries, just to make sure that price is flowing within my direction. So let's talk about range created demand first for the continuation model. So for the continuation model, instead of seeing a drop, okay, base and then rally, you're going to see a rally, a base, and then another rally. And you're going to be expecting price to retrace back into the base, okay, to the order block as well as demand, and then continue pushing to the upside. All right, now I'm not going to talk about the psychology, like I said, behind institutions and retail traders within this area, but feel free to go check out the first video where I really break down why this model works and the reason why I decided to trade order blocks in the first place. Okay, now let's talk about the pivot created demand model. So remember, this is all just continuation. So what you're going to see is you're going to see a rally push to the upside. You're going to see a pivot. It's simply just going to be like within this area right here. You're literally going to see maybe, let's say we're on the H4 time frame. You're going to see a bearish candlestick, okay, and then you're going to see bullish push to the upside. Now remember, we are still trading order blocks, okay? So we still need to see our break of structure and our imbalance before we decide to take a trade anywhere within this area. Okay, we have to see our break of structure and we have to see our imbalance. If we don't see that, then it does not make sense for us to take a trade. Okay, I have to see that take place. So that is what I need to see in order for me to take an order block. Okay, now let's talk about our continuation supply models. So this is going to be very, very similar to our continuation demand models, except it's going to be flipped. Okay, and remember, let's go back to here real quick for the pivot created demand. Remember, when you see a rally, a base, and then a rally, okay, remember your base is going to be a pivot on the higher time frame, but on your lower time frame, that's where you're going to see all the structure. And most of the time, you're going to see a little bit of consolidation as well within that structure overall. But on the higher time frame, it simply just looks like a pivot. So it's going to be a higher high, higher low, and then you're going to see a liquidity void and a nice push that breaks structure to the upside. Okay. Now, keep in mind that you do have liquidity on the top and on the bottom of the pivot. Okay. And most of the time, what you'll see is price will come here. Okay, create a low, all right, and then push to the upside, and it could go higher, all right, and then what happens is it'll push back to the downside, take out this liquidity right here, okay, so it'll reach for this liquidity, push down to this order block, and then push higher. Okay, so it's just some type of, it's a slight variation. It just all depends on what price is doing, but you could definitely see that take place. But I'm not here to try to prove this to you guys. I'm here to give you guys this information, and then I want you guys to go back test it. Okay, I've back tested this countless hours. I was talking to a student earlier, a part of my mentorship program, and she was asking me, she was like, everything you draw out, I see on the charts. How does that happen? And I was just like, hours of back testing, literally. Right?
What's going on, traders? This is your chance to unlock endless possibilities with our unbeatable trading program. Priced at only $53, this deal is just too good to pass up. Come get access to a wide range of features and benefits that will take your trading to the next level. Whether you're looking to improve your profitability, streamline your income, or simply invest your own money, our unbeatable trading program has got you covered. Don't miss out on this incredible opportunity. Sign up today.
Right, so these examples that I'm giving you guys, these are the same examples that you guys are going to see on the actual charts. Okay, so just keep this in mind for this example right here. Now, let's talk about range created supply. So for my range created supply, okay, remember this is a continuation model. So if we're looking for supply, then price, if we're looking for a continuation of supply, then price has to be in a downtrend already. So we're going to see a drop. Okay, we're going to see a base. Okay, price can still collect liquidity, so we can see a liquidity grab, similar to the example that I showed you guys on the last video. I believe it was USD JPY, right? So similar to that one. Okay, I showed you guys on the last video. Okay, you can still see the liquidity grab, and then you want to see price create that break of structure with imbalance. And that is what signifies the fact that there is an order block here, okay? So I not only have supply here, but I also have an order block that I can target within the supply. That is the key, okay? You want to find your order block to target within the supply. And then you want to see price drop off again, just like this. So you want to see a drop, a base, and then a drop. So a continuation. Range created demand, you want to see a rally, a base, and then a rally, continuation. Pivot. Rally, base on the lower time frame, and then rally, continuation, okay? And remember, you guys need to see the break of structure and the imbalance in order to take advantage of the order block within the supply or demand. If you don't see that, don't take the trade, okay? Next, for our last example, pivot created supply, okay, for the continuation model. So remember, these aren't reversals, these are continuations, all right? So what we want to see happen is we want to see price, let me move this right here. What we want to see happen is we want to see price drop, give us a pivot, slash base. Then we want to see price drop. All right, so it's that simple. So then we want to see price trade back into it, give us our order block within our supply zone that was created, and then give us a continuation. And remember, price can do something like this. Okay, so we will have money right here, and we'll also have money sitting above right here. All right, so what price sometimes likes to do is break structure and then collect liquidity right here, come back to our order block within our supply, collect supply as well as any other orders that weren't mitigated, and then continue to drop. Okay, so continuation models, I do like continuation models, but like I said before, on this example right here, price can sometimes target some type of demand, okay, that's a little lower, or supply that's a little higher. So that is something that to definitely keep in mind. Like right here, for example, right? Let's say we have something like this take place. Okay, there's demand right here as well as an order block that caused the break of structure as well as imbalance. What price can do is it can pull down here within this range. Okay, and then rally and push to the upside. Okay, and this is going to break down like having multiple points of interest and things like that. It's not complicated at all, especially if you're using my two-step method, using my three-step time frame method in order to take the entry. All right, but if you are not a student of mine and you don't use those methods, you may want to keep this in mind when you are just setting your orders based on the higher time frame. Okay, it's going to be very, very important that you pay attention to that. Outside of that, taking continuation models aren't bad at all. All right, they're just continuing the trend, so they're high probability. But the risk to reward on continuation models aren't going to be, in my opinion, as good as reversal models. Because on reversal models, especially if you're catching the reversal on the daily or the weekly or the H4, most of the reversals are going to be very, very good, which we will go over later on this week. Throughout the trade breakdowns and things like that, and we will be doing more $100 crypto giveaways. So far, 2 weeks ago, I believe we had 5 or 6 people win. All right, so you guys know who you are. Thank you for commenting, thank you for subscribing, and thank you for supporting the channel, leaving thumbs up, things like that. And we will be giving away another Trillionaire Mac Trades lifetime membership. All right. So if you are interested in seeing examples of these weeks after weeks after weeks, going through and being successful, right? Then you need to click the link in the description. If you are someone that is saying, I want to trade smart money, but I'm having difficulty putting my eyes where they need to be. I don't want to pay, thousands of dollars for these courses. I don't want to pay, pay a lot of time on the charts and things like that. I just want to be able to grasp this concept now. Then what I need you to do is click that first link in the description, join Trillionaire Mac Trades, okay, and take advantage of my recommendations. You don't have to do this alone. All right, you absolutely do not have to do this alone. And if you guys want me to, what I can start doing is when I send my trades, there are over 7,000 people a part of the channel right now, and that's going to continue to grow week after week. And the prices are going to increase for sure, because I've had some people that have been forwarding the trades out of the group, okay, and I have a bot within the group that lets me know. So I'm going to increase the price so we have less people trying to take advantage of the trades and resell them as their own signals and things like that. We've worked too hard over here at Matrix Trading. All of my students have worked too hard to have that happen. All right, so the price will be going up very, very soon. Take advantage of $29 per month or $140 lifetime access. If you guys do have any questions, feel free to comment down below or hit me up on Telegram or Instagram. Both are in the description down below. And I will catch you guys on the next video. All right, so this is part 2 of 4 parts or maybe 5 parts. We'll see what happens. I'll catch you guys.